Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Forex Factory, as I'd mentioned on Saturday, is the holiday for the Chinese markets pretty much most of the week, up until Wednesday, essentially tomorrow. So, you'd think that would have created less volatility for what went on in the markets, but it didn't, because we had a pretty big sell-off yesterday from Friday's rally, at least as far as the equity markets is concerned. So, just keep in mind, Friday is the big non-farm payroll. It's the unemployment rate. Everybody calls it something different, but the bottom line is it's a lot of factors, right? There's an inflationary component, or I should say an hourly earnings component, right? Isn't that kind of inflationary these days? There is an unemployment component to it, and then essentially it's the biggest report that gets disclosed as far as our country here in the United States, red folder events, and that's Friday at 8:30 a.m. New York time. Keep in mind, my stuff here is all sort of dialed in for Pacific time, so you can always check these times to see its corresponding. But as far as CAD, we've got some big events Thursday and Friday as well. I'm not sure if a lot of the developers have restarted some of those CAD pairs. I know that Dastan, I was talking to him the other day, he sort of has some of that stuff on hold. But maybe we'll bring some of that back in, as any pair certainly has periods of time where it's just not acting right. And many of the normal trades that would be made on just have much lower win rates. So hence why the flexibility to shift to another pair, unless you're using Neo. So I also have a number of Flash. I know these guys are sort of nearing the end, hopefully, in terms of deployment. So I'm going to show some of the Flash. As you can probably see them tabbed up here. I got a bunch towards the end of FX books that are on both live and demo accounts. So you guys could see how consistent Flash is doing with both very conservative as well as moderate settings. So, past performance certainly is no indication of the future, but I think it certainly at least helps to understand about the consistency of any EA's performance, right? I mean, I spend just an inordinate amount of time talking about that, but I certainly think it goes without saying a zillion times. This is the biggest issue for many people in terms of risk management. It certainly was in the early days of Economy, which is our previous iteration as a company. People would just use ridiculously high settings in their accounts and just get blown out in a flurry of craziness with our first product, which is an Einstein and Alexander. So I just never was a fan of it. And really kudos to Tyler for taking essentially a good base platform, but putting all kinds of gear-based parameters on it. So using Gearbox is done really well. But it does require a fair amount of dialing into the software, depending on one's level of wanting to participate in, the weekly trading of the software. So, right. So I think that's pretty much everything I want to say as far as Forex Factory. Let's move into the community. So the news feeds, I'm not sure if you guys seen this, but kudos to Brian White. He posts a lot. But these are my weekend notes right here. And it looks like a couple people never got the Saturday recording or not. So if you guys had actually had a chance to see it, post a comment here if you would, please. That way management could see that it went off okay, even though I may or may not have remembered to push the record button. It should have been my fault. And as I chant to my children all the time, one must take responsibility for one's own actions. So there's a community. Notes are in there. move on. All right, into the charts we go. First thing I'm going to take a look at, let me just expand the screen out so you guys can see this. So this is the dollar. I have talked way too much about how this was a zone that was a big reversal. I mentioned this a little bit on Saturday, but certainly always want to address where the big zones are. So far, we've been one time frame, not necessarily today, but since we hit this zone, we were one time framing lower for 3 days in a row. There is a distinct possibility that we actually need to put more work in this zone, which is getting quite murky. But in any support or resistance point, it is ultimately the other time frame players. It's just a acronym to explain, sort of the big institutions or, whatever, mutual funds, hedge funds, you name it, family offices, sovereign wealth funds. We call those just the institutional players. It really is up to the other time frame players to take us out of a particular area, right? And a lot can be said from how that action takes place. So if we're not going to break out, the dollar bears will say something like the following: well, yeah, we're going to go back down and visit that under 90 or under 89 range all the way to 80 and a half, which essentially is the edge of the ledge here from many years ago. What I'm saying is I don't know that. I try not to be bull or bear, albeit I am a bear long term just because of the debt levels of this country. But short term, I think that we have more work, it looks like, to be done, unless this is a really shallow pullback. Okay, so this is something you want to be super cognizant of right now. If this is what they call a shallow pullback, then it's essentially sucking in some suckers, right, before it blasts off up. Don't know that that's going to happen. It could be completely wrong prognostication on my part. But right now it's hinting that it wants to do that, especially if it holds yesterday's low. All right, so right at this 93, 8ish 70 area. So just keep that in mind if you're looking at this as your primary currency, which I highly suggest if you are accepting trades or trading other pairs related to that. All right, so let's go back, and for those trading the index, here's the S&P. Real murky action here, but essentially we have a little bit of a resistance point right here. Ideally, it seems to me like we want to go back down and test yesterday's low. So I'd be a little less bullish, unless some sort of event comes out that's bullish. I would say that, from an indice standpoint, and this is just a daily chart, but you could certainly drop down to 4 hours or analyze it even further. Actually, get down to an hour chart on this. All right. Had a couple of dojis. I don't have the volume overlaid on this right now, but this is looking like the area of resistance here on the hourly chart. It's all 43.80 area. This seemed to me like this was too quick. We'd probably want to go back down and test the lows. Take that for what it's worth. Qs. Switch back to daily. This has had more of a breakdown than the broad market has, because obviously tech suffered some weakness, especially in the areas of general tech and biotech. Same thing, probably going to visit the lows. DXY, we've already addressed. I do want to take a look at that on a weekly chart, though, first. So the one thing I wanted to point out, which really just coincides with a bazillion other things here at this 94.5 area, is how big of a support point this was from a squeeze zone. So these orange and red lines represent squeeze zones. The orange typically a little bit stronger than the red. And then we came back up. So we've sort of broken out of our, year and a half zone to test the upper end of the zone. But there is a great example of confluence here, even though this resistance line here in red, you can actually extend because you can see where we've come up against it a number of times. It just bounced off from a weekly perspective. And then there's a bunch of other stuff up here we're finally getting to touch, and that's long-term moving averages on the weekly chart. So there's a whole bunch of areas of confluence, lots of stuff showing up. So it could pose a problem. It may, in terms of getting through these areas. You know, if we can't make a run for it in a week or two, I would expect we probably go back down and test the lower end of this range. So what does that mean for everything else that's tied to the dollar in some form or other? The actual opposite is going to be the case. So if we're looking at a daily chart, reset this here. I always like to look at the shrunken view, if you will, so you can see where we've spent a lot of time in this upper area. This corresponds almost perfectly with our break. Lower in the dollar is ripping higher in most of the other currencies, but now we're back down against that edge. This is all right here at this. Make sure we're even touching the Bollinger Band too on the daily. Not a very common occurrence, as you can see right here. We've done it. We did it right here. Could argue we did it right here, right? Right here. Just not many times over the last year that we've touched these bands. Did it right here. So what's that, 6 times total? So again, could certainly argue for a snapback to the mean if in fact the pullback in the dollar and it cannot get past that whole 94.5 area. This is my read on it. It could be wrong, but typically in pretty decent as far as having a feel for it. I think what could really certainly pose a problem is on Friday, you know, having some sort of crazy numbers come out, and or getting a potential package done on this $3.5 trillion domestically of crap, and it's just doing nothing but bringing this country in some pretty serious, which we're already at serious debt in terms of trillions of numbers. That's devaluing to the dollar, right? It's devaluing typically to any country's underlying currency if the value of their GDP shrinks while their debt increases, right? Our GDP is expanding, but our debt is expanding at a higher rate, and that's a problem. Now, this has been, if you just look at these two here, let me just sort of jump back and forth again, looking at daily charts, the two biggest pairs out there besides the dollar, GBP USD, Euro USD. If you jump between these two, look how much more powerful this GBP rally has been off of the dollar reversal. I mean, this is what you call one-time framing up, meaning each candle has a higher high and a higher low than the previous day. So not necessarily indicative of tremendous institutional buying at this point, but it is a pretty strong pattern. So 4 days of a trend up after you really can't read anything into why it stopped here. You know, you should probably have to drop to a weekly to see if there's anything there. Really isn't. I mean, look at that. Actually on a weekly, we did touch the lower part of the Bollinger Band, but I don't really see anything else other than just a maybe resistance points from way back in 2020 that we were at. And we sort of went down to test that area and was rejected, just like the dollar was rejected at the highs. So far, they all look like they just want to fall back in the sideways trading tight balancing range that they've put together for some time, and that big players, which I figured we'd start to see an emerging of that as we come towards the end of October. As many of you have heard me say, it is a fiscal year-end for many investment companies out there, mutual funds like a Fidelity or American Century or Vanguard. They all have their October 1st is just a calendar year end. So there's usually a lot of portfolio adjustments in all areas that typically goes on. So that's why we're seeing heightened VIX readings. If you hadn't seen me show some of that, let's take a quick look at the VIX before I forget. This is a measure of volatility. You want to look at this on a daily chart. And you can see how we've had more elevated readings recently than the mid-range that we've been in. So a lot of that due to orderly sell-off yesterday, as we saw. If it had been a crazy sell-off, you would have started to see these VIX spike up. As the numbers in the volatility index, anytime you see us getting into some of these crazy levels, like during the pandemic, 80 and 90, this is when it gets really fun as far as trading volatility. All right, so let's go back, take a look at more. So daily, USD CAD daily holding again. Really just the dollar's weakness of the last 4 days in relation to all of the currencies you can see playing out on this as well. But support right in this 2570 area. Now we had, here's a great example, one time framing up, by the way. Really just the kind of rejection down here that we touched five other times on this daily chart, and then we moved all the way back up. But we were one time framing up through this period. So a much more decisive move that once you recognize that it's more of a powerful move, especially with these heightened volumes you see at the bottom, one is less likely to short, if you will, at this 111 area, just above this area. I would have let it play out. Notice we came up and blew past the Bollinger Bands, which is this, whatever you want to call it, teal green color here. This is actually, this band has been the formula that I was given to build this band is a little unique, and it's been really an excellent measure of when things just got a bit stretched and they were going to snap back. So we had 2 days trading outside of which was, you know, normally this has been a sleepy currency recently, right? Obviously in this part of the year took us up into this tight range, but it's been a almost coiling and tightening up as far as its range. Typically tells you we're more due for a breakout just by the sheer length of this zone build, essentially out. I call it a balancing area, but we were auctioning back and forth between highs and lows in here. Once we had a pretty decent move come in with vol, not a ton of vol, but you know, we just moved all the way up. Not something you typically want to step in front of. You want to let it play out. But if you do trade Bollinger Bands, or you know, I know a lot of the rooms that we're going to have, and or Arrow and some of the other softwares, you know, they have their own set of parameters that they trade. But this is usually a really good trade to take from a daily chart perspective. Anytime you get really out there, especially if you're way above the Bollingers and there's a whole bunch of other areas of confluence, let's say, that showed up at this 112 level, you want to play with that. Swiss inside the range, AUD. I can't really read anything on this chart. I have very little to go on in this, I'll tell you. It's sort of perplexing to me. So I don't trade this. I know a lot of our subscribers don't. CAD CHF inside the range. Same thing with JPY. I haven't shown the euro, but notice we're back down against this. So and obviously the strength of recent strength in the pound, pushing euro down here near, pretty much near the edge, you know, this lower area. Let's take a look at actually, I'm sorry. Let's take a look at GBP CAD. This is the neo currency. lot of resistance that I see once we broke below this red support zone. Again, some touches of Bollinger Bands here on the daily chart, but nothing too crazy. And now we got a couple of days of dojis, which is indecision-based candles. Let's take a look at the weekly. Still inside a broader range as far as the weekly. Monthly chart. You can see sort of the bigger picture over the last 10 years, which is a little longer, like 14 years, right? This is typically not a chart that you'd use market profile on because you can take very little from the volume that executes a decade ago, right? Can't really go on that, but it is interesting to see that the absolute center point of its trading on a monthly has been right around the volume point of control as far as aggregated vol that's been executed over the last 14 years. That is an interesting thing. Notice it's been hovering right around that point. Now, if we drop back down to a 4-hour chart, real tight coiling range. See that? I think at some point we're probably going to break out of this. What else can we glean from the tea leaves that we're seeing here? So I'd say based upon my read, if it's correct, this 1.717-ish zone is holding us. If we get above this area and hold, I would have to say I'd probably want to see that on a daily chart. We're back up in this zone, and we're probably going to transfer all the way to the other side. So typically, if an auction fails, right, the same could be said for almost any instrument to trade, stock, bond, not necessarily options, but their underlying equities they're associated with or index, certainly the futures markets. If you have a failed auction, right, oftentimes the zone that it's in, maybe this is the value area high and this is the value area low of a particular volume based, right, a value area high in this particular over this period of time, which is the best. You're going to want to have all of the movement in this. And I usually want to go back like a year. Here we are, a little more than a year. So we spent a lot of time in this area. You only want the candle showing from a volume perspective of when we just broke into the area. So, and the reason I do this is that, one, there certainly is all kinds of institutional OTF players out there that have volume and price and positions they've put on from, in some cases, hell, we're coming up on 2 years. Anything more than that, it gets to be a bit murky as to whether or not it plays a lot of part. But the point is you can see where this point of control, which is this red line, and this is strictly just a volume only analysis. Forget about price action or candles or any of that stuff, right? Support. None of that else matters if you're looking at the blue lines on the left side of this chart. All that matters is the data that's been compiled in terms of volume and where it executed. The center point, or the most volume, has totally held us on price. So for the naysayers out there that maybe don't understand market or volume profile, it's the same analysis. It's just auction market theory. You're just analyzing the auctioning processes from a volume standpoint. Now, we don't have the ability on TradingView to do a time-based profile. I wish we did. I've been bitching about it for a year, but it requires a whole level of other stuff to go into the development in this PineScript platform these guys use. So like at some point we'll probably, I hope, I hesitate to show you guys the LensSoft IRT software that I use to trade futures and get, in my opinion, a much more higher level, almost like a Bloomberg or CQG level analysis on what's going on in the auctioning process, which I always consult. But the problem is it's on my other computer system. So I guess at some point I should bring it on this one. But, just note that this is where it was showing up on the longer term chart. Set all of this. So in the end, really what is holding us back is a whole bunch of stuff down here. But the problem with this currency and many of these that I consider crosses or, a tertiary, or they all are to a certain degree right now a factor of pin action that comes off of the dollar, right? So I think it's always important to study the other currencies, and you can do this with a click glance. You don't need to do the kind of digging I do on Tuesdays and Saturdays, right, in these calls. But if I do this enough, this is going to put everybody, I hope, into a very specific process for how they analyze. And then you can utilize what I'm teaching you and then overlay it or add it in, sort of melt it into whatever else you're looking in terms of your other analysis, right? But it's also a way to check your work. There's a bunch of stuff holding us right now. And, honestly, I guess it's my hope for everybody that, Fernando and the double secret developers of Neo have built some of this into, at least from a long-term perspective, of the software recognizing that, maybe we've gotten a bit stretched and maybe we'll snap back a little bit, and we've got pretty solid support zones down here on all different types of technical analysis. Right, that was long and drawn out, huh? Let's take a look at AUD CAD. Tight range again. GBP NZD, again, tight range. Gold for those trading. I think this has been a surprise of many, including yours truly. I really would have thought we'd have seen some better strength in this, and this isn't really even, there's a lot of noise in this chart. It's best viewed, in my opinion, on a weekly. You can see a lot more perspective of what's going on here, all the way from the absolute high, which was approximately a year ago. And a lot are forecasting for this to be up around 2,500, but it's, even though the dollar has been rallying, which is certainly the argument for the pullback in gold, and then an eventual dollar crash down to the 85 area, where a number of individuals that are far smarter than me and have been far more right the last 20 years are forecasting it to head. That may be, unfortunately, what is needed first to get any kind of catalyst for this to rip up. But at least from a weekly perspective, real solid support down there at 1680 an ounce. And then short term resistance here, 1827. If we drop to the dollar, if we drop to the daily, 1823 on the high, maybe a whole zone here right into 1850, 40-ish, this whole zone. And then same thing down here. So we just want to take a look at oil. I don't trade it. I don't recommend trading it, but it is up near the highs. So does that mean anything broadly? Well, it means there's inflation coming in, right? So this is best viewed right now on a weekly chart. We haven't seen levels like this. I mean, we're there. We're in no man's land, and no surprise, as I talk a lot about, if you get above a certain zone, see how you can see like a complete zipper move. And we essentially ripped $3 up into no man's land up here. Got to even drop to a monthly chart. See this. So when we had a whole zone of, what was it, 120, it's like 115, 110 if I recall way back. It's a long time ago. Then we blew through it, right? Air pockets down. This whole area has been major resistance until now. So for those who don't think there's inflation coming, and look, I get it. There's supply chains disruptions. There's ocean freighters sitting off the coast of whatever country just piling up, right? There's a whole bunch of reasons for what's going on. Pandemics, finally lifting, maybe. um, Maybe the crazies are climbing back in their hole, but essentially we're pretty quick. Could just absolutely zoom up to the 90 area, depending on how some of these demand factors come out. So, for those on television or the Federal Reserve or Jerome Powell or any of his insider trading comrades, wink, wink, joke, joke, are not talking about inflation, I disagree. Plain and simple. So, cost of petroleum goes up, so does pretty much everything else on this planet, because petroleum's in almost everything. Plastics, you name it. What does this mean for us? It just means we want to be concerned about movements or exaggerated movements in currencies or any of the indexes because of the fact that inflation's creeping up. Just keep in mind, inflation, this is going to sound crazy, but inflation can really stifle demand to the point where it becomes deflationary, right? Both in their extremes are very negative effects on all kinds of asset prices. I don't care if it's cars, houses, art, right? Certainly the markets. The extremes of both sides can cause disinflationary is actually considerably worse for any commodities price than inflation, right? Because the demand's drying up in a huge way, whereas demand is stronger, and they both could serve negative. So we'll be keeping a much closer eye on what's going on. And I guess I probably should even bring in, since we're sort of combining Saturdays, lack of recording on my loser part, to look at Invis. Let's do the Finny Vizzy. We can see long term on commodity prices. There's the S&P ripping up today. Opposite of yesterday, right? It's crazy. All right, so let's look at daily charts, currencies, charts. So this is really all I care about in the grand scheme of things. Dollar rises, almost everything else goes down, right? This is sort of an interesting break right here, I must say. So dollar's gone down, but the movement up, the GBP's been a little stronger than you normally would expect. Very flat in terms of the dollar CAD, okay? If we take a look at the whole space, let's just look at futures, daily charts. This is everything. So here's the movement in, here's the movement energy right here. Let's see where these outlines are. Both of the measures of crude, gasoline, strong, certainly heating oil. No surprise here, we're coming into the winter season for many of the areas of this country. Nat gas, it's all related to inflation, right? So thus goes the opposite of metals. Silver considerably weaker, along with palladium. But I think where, I mean, look at this. I mean, tell me this isn't crazy. It's just decreasing the price of clothing. Lumber, surprisingly enough, we had a huge cratering, and now it's back up about what, 25% off the bottom. But cocoa, cotton, oats, interesting to see soybeans absolutely cratering, but the oil is going up. There's some disconnects going on here, or as they call it in Dennis Gartman land, contango. There's your word of the day. I mean, it looks to me like there's certainly is components where there's more disruptions in supply chain, but between the costs of basic materials, cotton, the big ones, certainly in the energy space, we're seeing it. I mean, just look at this nat gas, 4 to upward of 6.32. I mean, and then you have the bears that'll say, well, copper, they look to this. In many cases, they call it Dr. Copper, right? If you look at just a simple weekly chart of copper, we've moved up a bunch in the grand scheme of things. This is what they're not showing you, right? In terms of the prices of semiconductors, this is primarily driving these copper prices. They'll just show you this small swath here. Oh, look at it, it's going down. Well, yeah. We had a ridiculous move up, and as the foundries of the world start to catch up on mostly automotive related, but hell, the vast majority of the 80 plus modules in the basic car that's produced these days, and many of those modules, boards, is the same thing you'd see in a computer and a lot of other stuff, right? So the demand's there. It's, that's still an inflationary chart from a weekly perspective as well as daily. I don't want to drag on too much in this area. I just want you guys to get a feel for, you got to look at a lot of all the other factors, or at least let me look at them for you. We could determine a plan. That's all I want to do. Let's go into some of the flash stuff. So as you guys may have seen this, maybe there's a bunch of this stuff getting shared around. This is fxbook.com. Always make sure you're looking at only a double green check mark. Okay, tells you what's set up and it's being actively managed correctly. So this particular one's up a little less than 20% in a little more than 3 months. This is very conservative settings, good return. Imagine if you could have 18 to 30% on your entire retirement account, right? You'd be rich people by the time you got to retirement. So put that into your understanding. Same thing here, real conservative. This one started a little bit later, but essentially a little more than 3 months, 13%. These are very conservative settings. We have a more moderate setting. It's actually done very well. The thing I want to note, and it doesn't matter which one that you look at, notice these drawdowns, which are very low. Now, obviously, this is more conservative settings than something like this, right? But see this drawdown component. Notice how quick it gets back out of drawdown. So it'll take a hit, right? Up 11%, loses the whole 11%, comes right back. I think that's an interesting thing that is slightly different than a lot of the EAs that I've looked at. And the vast majority of the EAs I've seen that never made it to products here, they'd have, huge drawdowns. It would do really well for a period of time and it'd give the whole thing back and never make it back, right? Like some of the early days of Einstein. And then obviously currencies were going all over the place during the height of the pandemic and the beginning of Q2 of 20, right? Everything was bananas back then. But this thing's come back a lot, so it's good. Am I condoning this over any other EA? Haven't seen it long enough, right? So I can't say, but very promising. It's also very promising. The developers are really good. Guys also has a lot of clients in Israel that's been on this for many years. The only thing that sort of agitated me about this whole thing, and maybe it's just my own hang-ups of Mr. Risk Management, right, is that nobody could seem to show me some sort of longer-term track record on it, like I was able to view on Variable or some of other pieces like Gearbox, right? I can't see the last 2 years in a MyFX. They claim they've moved around from broker to broker. Hey, that may in fact be the case, and I'm making mountains out of molehills, right? But I just would like to see a longer term FX on this. But I've been rest assured by the biggest at this company. But I continue to fight for you guys, right? I am not swayed, and I'm completely transparent to being risk managementally oriented, right? New word, towards these subscribers, because essentially you guys are my employer. So with that being said, past performance is no indication of the future. Anything else I want to mention? Medium settings on this one, but this is a demo. This is interesting because it's a real account. with more conservative settings, hence the smaller drawdown, and it's at least was put on slightly larger dollars. Like at one point, I guess this is running about 11 Gs, but there's been some withdrawals taken out. What else? Win rates, very good. See that? Profit factor. You can always hover over this. It tells you what it is. I spend most of my time here. It's always good to look at the scattergram if you've never seen what this looks like. It just shows, how many sort of black swan events took place, right? Where you just had, with the old early EAs we had brought in Alexander, especially with a lot of the riskier settings, you'd see a whole crap load of trades in this area as far as the scattergram, whereas we're only seeing one or two. That's really good. You can go through all this other stuff, trades, and the key really is that if you're trading, and you want to look at just the different activities in terms of currencies, or you always want a decent data set of trades. You're getting a pretty decent size here. It's not a large size. Anything over 1,000, you're having a much larger data set you can draw from. For the question I just got, it's maximum adverse excursion versus maximum favorable excursion. So the favorable would be green. Just think of maximum profit excursion, right? Versus maximum adverse or loss excursion. How far does something travel in the loss category? If there was a ton of it around here, as with some of our previous AEs didn't do so well, you want to see a lot more in the positives, anything above 0, right? In a much larger. But this is good. Some have a higher win rate than others. If you look at this one with moderate settings, here I'll show you. So you're taking a little bit bigger hits, right? Moderate settings. But let me just jump back. Yeah, I'm not going to get into that. Win rates are higher. Not by much. Not the biggest data set. See that? So you can always get into all of these other metrics, right? Factor in trade commissions if you want. But I know that a good chunk of our global subscribers would say something like the following: I should be able to get more profit each month so that it pays for the subscription to Auvoria. And I actually completely disagree with that. So unless there really is not in one's budget to be spending $100 or $400 a month or some sort of aggregate in the end, or I should say some sort of mean somewhere in between there in terms of cost spent, save up the money, come back when you can. But ideally, you have a couple of pieces of software. You're in the Aero Trade Room or both. And you have some of your longer term money on something more conservative, maybe not necessarily the moderate settings here, but more of the conservative settings. What if because the question always gets asked, and this is just totally as a risk management discussion. If you had $1 million, okay, now obviously this sounds crazy, but we have some subs that can run $1 million in an account on this. If you had $1 million running this for 100 grand, would you be happy that you're up $13,700 in 3 months, a little more, right? And they would always say, well, hell yeah. So it puts it more in perspective of that, right? What if you were up $136,000 on $1 million, right? Approximately. You're up 18, you've had a drawdown. Watch, we'll probably pull out of this pretty quick. This one actually took a little bit longer, and I think a lot of that is the hit that it took. But look how fast it came out. I mean, hell, less than. I mean, there were drawdowns. In all fairness, they were much more than 22%. But I mean, hell, there were some drawdowns taken that 60, 80% that it took 6 months to come back from an Einstein Alexander, right? Just ridiculous. I mean, you shouldn't have been taking a drawdown in the first place, right? hindsight's always 2020. So that's why we've gotten much better at vetting out these EAs. So anyway, coming up on an hour, I got to get ready for my 11 a.m. call with our big dogs in Phoenix. So I'm going to wish everybody a great week. Danielle, the MyFX book, we can go into it again and again. Let me just do this. I always hate when my bookmarks turn off. I can't find anything. All right, so let's find this for you guys. This is the how to connect. Actually, one of the betters. I use this link a lot. I'm going to post this in the room. Share this with everybody because I can only lead you guys to water. I can't make you drink, but it certainly is up to the team leaders around the world to make sure all of their peeps got hooked up to this. It can be kind of a pain in the ass, but it's 12 minutes to show you how to hook it up. You want to make sure you get those 2 green check marks that you can just keep analyzing this. You don't have to do it 6 ways to Sunday like I do. You can glaze through this in less than 20 seconds, right? Each week or each day or once a month, whatever. Everybody have a good week. I will stop the recording. Hopefully it works. And may the trades be with you.